All right. Hey, everybody. Welcome. That's funny. 289. I remember you from yesterday. Um, welcome to the third day of Q&As with Tim Grittani. I'm sure most of you all know who he is, but for anybody who isn't, I'll let him kind of do a really quick welcome and introduction of himself and a little bit of his background. And for anybody who wants to jump in with questions, go ahead and start putting questions into the chat box. I'll keep an eye on things and make sure that we get to as many as we can. So, Tim, welcome, and give us a little introduction about yourself.
All right. Well, yeah, first of all, thanks to Jacob for putting this together. This is a really cool event, really cool idea. I'm happy to be here, happy to answer some of your questions. For those of you who don't know me, my story is that I've been full-time day trading now since the start of 2012. I part-time traded for about 6 months in 2011 when I was finishing up school, working a summer job at State Farm. And back when I started, I had about $1,500 to my own name. Borrowed a little extra money from my parents to open up a few more brokerage accounts with the stipulation that I never touch that money to actually trade with. It was just there to keep the accounts open, and I better not take any positions bigger than $1,500. But I had some early frustrations, early failures, blew my $1,500 portion of my account, and thankfully, had that summer job at State Farm because that allowed me to refund. And within a few years of that, I was at $1 million in profits before tax. And right now I sit at about 2.7 million, I believe. So let's get into it, I guess. I don't really have much of an agenda of what to talk about here. I want to answer your questions, see what I can help with. The one thing I would ask is maybe that we try to stay a little more away from the questions that you could find on Google, that kind of stuff. But otherwise, let's get into it.
Awesome. Yeah, no, I'll definitely agree with that. I'm sure everyone here has, I can guess probably pretty easily find questions to the really simple, what do you trade? How do I trade? Those sort of things. So, go ahead and start throwing some questions out in here and we'll get going. Guest 007 here already gave us a really quick little easy one for you. It was, if I have 3K in my account and I've been trading for a while and know the risk, how much do you think I should play every trade to grow my account? So maybe kind of a little bit of a risk management sort of a question here for you.
And I guess for me, the answer to that question would be, it depends on the setup. It depends on the scenario and my experience with it. Back in the day when I had, the smaller account, for example, if I had a new promotion release from a promoter that I thought was reliable and that I could scalp really quick for a nice profit, I'd go all in without a second thought because I knew that I could win those 90% of the time. But if we're trading something else, like maybe if I'm trying a dip buy, hoping that the stock will ramp back up later in the day, and I feel like it's more of a 50-50 trade, I would not want that kind of risk on the line at all. So, and I guess also, I don't think so much in terms of how much of my account is in the position. When I think of risk, I think of how much am I willing to lose. So if my stop loss is at $1 and the chart hits $1 and I have to stop out, how much money will I lose at that point? And so, right now, I've sized myself back down and I've been kind of rebuilding lately. But right now my risk is $2,000. So for example, if I was in at 105 and I had to stop out at $1, that would mean I'd lose 5 cents a share. So to lose $2,000, losing 5 cents a share, I could have up to 40,000 shares. So that's kind of how I think about the risk. But it's really so situational because, like I said, it all depends on the setup, how high of odds you feel like it is, and just how comfortable you are with it. Now, since you do have the smaller account and you do want to protect yourself and you don't want to, you obviously don't want to blow up, especially if you go on a bit of a bad streak, because that happens to all of us. We're all going to have those streaks where, maybe we do take 5 or 6 losers in a row. And you don't want that to cripple you. You don't want that to knock you out of the game. So with a $3,000 account, I personally probably would not want to lose any more than $200 on any given trade. And even that might be pushing it a little bit. But, once again, that answer really also is just tied into win rate and, how often do you lose compared to how often do you win? Let's see, I'm gonna scroll back a little bit here and try to catch up on some of these questions.
So I think the next one that we had up there was when learning indicators or technical analysis, what do you recommend starting with?
I would just say basic support and resistance. That's about all I know as far as technical indicators are concerned. I really have never concerned myself with anything more than that. I'm a big believer in keeping it simple. There are so many different moving averages out there, so many different indicators, and you just wind up with a bunch of lines on the chart. And sometimes you just have to kind of wonder, like, okay, which one of these do I listen to? Because you'll get a lot of conflicting signals. So I guess I just started off with, just basic support and resistance. I trade with candlestick charts only. That was one of the first switches I made over. Because, when we all first start, I think a lot of us, wind up on Yahoo Finance as one of the first places we look when we're looking at stocks. And it was the same for me. I was looking at these line charts on Yahoo Finance. So the first thing I had to do was learn, what is a candlestick chart? How do you read a candlestick? Which, there really not too much goes into that. And, you can just Google that and you'll figure out how to read candles. But then it is just, where have dips been holding? And that's your support. Where have spikes been topping out? That's your resistance. And those are really the key levels I look at on both an intraday level and a daily level. I really like going back to 1 year charts or 2 year charts where you're looking at daily candles. And I'm looking to see on the charts when I'm looking for key points, I'm looking for days where there was well above normal volume. Maybe some news had been out. Maybe it was earnings. I don't know. And I'm looking to see, okay, so this day where the stock gapped up 20% and it spiked up 50%, where did that spike fail? And was that on heavy volume? Because in the future, if there's a day where the stock is running up into those levels, I might consider shorting into that, because I would say, okay, back on this day when it had good news 6 months ago and there was really heavy volume, it couldn't break past this level. So now maybe I don't think it can again.
Awesome. And we definitely have a lot of good questions here coming in for you. So we had a good one up here a little bit further back. It was, how do you decide which stocks to watch during the day? This particular viewer says that they often miss big plays because they're just going through the list trying to find a play. And let's see. Oh, so some of the plays were so huge that it killed their confidence a little bit. So a good question about how to narrow it down on which ones to watch and how to not get lost watching them while you're seeing the move go on without you.
Right. To be 100% honest, getting in early has never been a talent of mine, especially as I've transitioned over to some of the listed stocks, the ones that trade on the major exchanges. With the pump and dumps back in the day, at least then there was, a trigger that I could try to be one of the first ones to see, like, hey, an email blast goes out from this promoter who can spike stocks. So you just need to make sure you're one of the first people to see that email and then just start clicking buy and hoping for fills. But with NASDAQs, it's not that simple, because there's a lot more trading pre-market. Stocks will have gapped up a lot already, and then it's just a guessing game of, okay, which ones are going to keep on running, which ones are going to fade off. And that's an area I haven't gotten that good at yet. A big part of my trading style is I like to let the trade come to me. So I'm usually on the short side of the trade, because I'm waiting for the charts to get overextended, the ones that have run a lot already. And once I feel like that momentum is exhausting and that momentum is turning, that's when I start looking to strike, and I start looking to short sell it and ride it back down some. So it's it's less of a predicting game of, okay, which one of these is going to make the move. And it's a patience approach, and it's a waiting approach. Again, letting the trade come to you. So how do I narrow down during the day? How do I find these plays? I do that by running stock scanners. The application I use right now that I absolutely love is called Equity Feed. And with Equity Feed, you can put in really almost any criteria you can think of, and it will just spit out a list of stocks for you that meet that criteria. So for example, early in the day, if I'm looking for, okay, what stocks are gapping up, I might have a criteria saying the stock has traded at least $30,000 in volume. The stock is up at least 10%. And then I'd maybe have some price requirements in there, like, okay, it's got to be over $1, but under $10 or under $20. And you run that right there. And every morning I usually have a list of about 3 or 4 gappers that I immediately know I want to keep an eye on, because they're up on some kind of news, whether it be, again, earnings, a contract win, whatever. And I just want to watch the price action for a while and maybe look for a chance to ride it back down after the momentum reverses. But I do think that stock scanners are the best tool for narrowing down what stocks out there to trade. And what you scan for could be entirely different than me. It really just all depends what setup you're looking for.
All right, so I think we've actually had a couple here that I can combine together. So we had, I guess, one really quick one. Do you ever use the Ichimoku Cloud?
I don't think I even know what that is.
That one's Matty Owens is known for using that one. So anyone who wants to know more information about that, he's got a great one, great explanation on his site, triforcetrader.com. So we've got a couple here on psychology. So one person asks that they find themselves forcing trades due to an urge, kind of like gambling. And so do you have any tips regarding the psychology for that? And then I think there's another one down here that is somewhat similar, where they ask, what do you do when you're down more than your risk level, but you know that the stock will go down? So they're talking about short selling, and it's going against you, but you're still in your conviction that it's going to do what it's supposed to do, or what you think it's going to do.
Okay, yeah, I'll take those one at a time. So the first one was about forcing trades and kind of more of the gambler mentality. And for me, I mean, honestly, I think the way I got through that, and the way I get through a lot of my psychological issues, is I just lose enough, and I get to the point where I just like get so fed up with the losses from making that one mistake over and over and over again. Like, those losses force me to change. But if it's coming from a place of boredom, you know, maybe you're the trader who has solid mornings and then middle of the day pisses away half of your gains or all of your gains. And I've definitely been there too, and that's really frustrating. I know some guys will step away during the midday lull and, you know, just remove themselves from a computer. You know, they'll go to the gym or something, or go out to lunch and just basically remove the temptation, because they know it's out of the time frame of the day that they want to trade. So they just get away from it because they don't trust themselves. I try to distract myself to a certain degree. I do a lot of, just surf YouTube, stream TV shows, whatever. Just find things to watch during slow periods of the day that will distract me a little bit, because I did learn very early that less is more. You don't need to trade every day. And that was a big turning point in my trading career, because like I said, I struggled early. I blew up my $1,500 portion of my account in the first, I think it was 4 months that I traded. And what allowed me to finally become consistent and successful was when I took a step back and realized that I was just trying to do way too much. I was trying to trade 8 different setups, and, you know, all of them I had maybe a semi-decent understanding of them, but none of them I felt like I had mastered. None of them I felt like I was really all that connected to and understood. And so the big change I employed was I came back to trading after that blow up, and I said, okay, I'm going to narrow my focus down to 1 or 2 setups that make the most sense to me, that I feel the most comfortable with. I tracked all of my trades early on. I still track all of my trades, but I looked to see, where do I succeed and where do I fail? You know, what setups am I best at? What are my money makers? And those are what I stuck to. I cut out all the rest. And for a while, you know, I was just trading the 2 setups. It was, at the time, it was new promotion releases, and it was OTC multi-day breakouts. Those were my 2 setups. And if it was anything else, I would ignore it, even though, you know, it was really tough being in chat rooms and seeing people talking about all these other plays going on, all these other stocks in the market that are moving. People are, you know, yelling kaboom, giving each other high fives in the chat room. And you want to be a part of that. But for me, the discipline to stay away from that and to keep myself removed. I'd have times where I'd go 2 or 3 days without a trade. But when I was in a trade, it was an area where I felt like I had an edge. And that is what got me consistent. That is what got me to start having win after win after win. And that slow growth just kind of snowballed. And then after that, you know, I started adding 1 setup at a time. So you don't always have to trade only 2 setups, but especially when you're starting, that narrow focus really helps.
Awesome. Definitely some really great advice in there. So there's a really great question up here.
Oh, hang on. I've got to touch on the other one.
Oh, right.
Oh gosh, it was a good one too. I've got to remember what it was.
Let's see.
Still have it there. Oh, it was when a stock is outside of your risk.
Right.
Yeah, the question was if the stock is outside of your risk level already, so you failed to stop out as you had planned. I think it was, why not just wait for it to come back in your favor and then get out? I guess I will do that to an extent sometimes. I don't know if my screen share is working right now.
Yep, it is.
Oh, it is? Okay, let me show you a trade I had today where that happened to me. Because I was in NETE long this morning. I had it overnight because I thought it was going to break out. And then they kind of surprised me. They put out a filing overnight and the stock gapped down and had this just wild panic this morning. And I was, my plan had always been to stop out around the 40-cent area, maybe 39 cents. And I got out a lot of my position pre-market up here in the 39 area. But when the market opened, I still had 2/5. And I did get a little distracted by something else and looked away. But this is a 1-minute candle here at market open at 9:30. And it opened at about 40 cents and dropped as low as 26 cents, all in the span of 1 minute. And that was well outside of my stop. And I had the position still. I still had 20,000 shares of it. And that's where, it's a really fine line to walk, because I don't want to be the person who panics out and sells dead bottom. I don't want to chase that kind of weakness and just get out at any cost just to be out because, hey, my risk was broken. In a situation like that, where it was such a huge, ridiculous panic, I waited for the bounce, and I still took off into the bounce. So I was in the trade, till about maybe 9:45, but I sold the rest of my position at 34 cents instead of down at 26 or 28 or wherever I would have filled if I had chased the weakness. So to a certain degree, I will wait for that first counter move where the stock does come back towards my favor and use that to get out. But especially on the short side, there's a huge danger to that, especially if you wait beyond the first move. And I usually am pretty good about it. A stock will spike through my resistance level that I'm trying to play off of, and I'll cover into the first pullback 9 times out of 10. But that 1 time out of 10 that I'm still holding that stock and I'm still letting it ride, that's where I risk disaster. And I've actually experienced disaster a few times from that. Because, with a short sale, you can lose more than 100%. A stock can go more than 100% against you. So especially if you're overstaying beyond that first move, that's where it can get really out of hand. My biggest loss I've ever taken was a $290,000 loss on the ticker LAKE. And LAKE, that trade, it started off like any other trade. It, I think I shorted 10,000 shares of it in the 970 area. For a while, it was down at 940. I was up a few $1,000s on it unrealized. And then all of a sudden, some news came out. It spiked back. I didn't want to take it off for break even. By the end of the day, I didn't want to take it off for a $10,000 loss. The next day, it gapped up another $1 or $2, and then I started fighting it and adding. And by the time all was said and done, this stock that I was shorting when it was at $9, it got as high as 30. And this was over the course of days. So the longer you wait, the more out of hand it can get sometimes, especially if you start adding and fighting like I did. So, yes, usually it won't be that bad. Usually, the story may have a happy ending if you're really patient and you just wait for break even, or you wait for the stock to come back in your favor. But it's just not worth risking that 1 time out of 100 where things just go well beyond what you ever thought possible. So those big losses, let's see. So Lake was 290,000. CANF, I did pretty much the same thing. That was 100,000. There was one more. PBMD, I think, was about 170,000. So those losses, they hurt financially, but they're also just very emotionally damaging. So my motto now kind of is, maybe I will stay and wait for that first counter move in a lot of cases. But I do not want to be holding beyond that. I do not want to put myself in the position to have an unplanned swing position and just give the stock another day and another day and another day to just keep running against me and making things worse and worse. Because those times it doesn't work out just kill you.
Awesome. Yeah, I remember. I remember you doing the recap on that one. Sorry, I'm taking down some notes here as we're going. Yeah, I remember reading your blog, kind of breaking down how that whole event progressed and your line of thinking, and really, I mean, you could almost say that you did it right. You just kind of had the wrong timing or the wrong events, where you frequently were stopping and trying to replan, okay, now what's next, and stopping, now what's next, but then it just kind of kept going against you.
Right. And it's definitely more dangerous with shorts than with longs, because with short sales, there's all these limits to how long you can hold the position. And like I said, you can be down more than 100%. So there's all these factors out of your control that could lead to you having your position closed out forcibly.
Yeah, absolutely. And I actually kind of piggybacking off of that, there's a question that I've been holding on to here from a little while ago that I think is a good one. What was the insight or turning point when things just clicked after your first big losing streak?
Well, I guess the first big losing streak would have been the streak that blew up my $1,500 portion back in my first few months of trading. And, I talked about that a little bit already, how part of the click was, narrowing the focus and really just only playing those two strategies for a while. But it really was just mainly that, the narrowing the focus and knowing where I was good. And again, that was made possible by tracking my trades, by looking for patterns in my results and saying, okay, I'm good at breakouts. Okay, I'm good at promotion buys. Oh, hey, I suck at short selling. At the time I was a terrible short seller. That was the major reason why I lost the $1,500 portion of my account, because I just was trying to nail this stock that went sideways for 2 or 3 weeks. And I basically scalped myself dry. Like, it was ridiculous how many small losers I had on that thing that added up. So that less is more mentality really helped me. And I think my click moment was, I was down, I refunded, but I was still down $1,500. And it took me about a month and a half, maybe 2 months, to grind that back to break even. And that was a really slow process. That 2 months, it was, $50 gain here, $100 gain there. I think my biggest gain during that time was probably like a best damn penny stocks promotion that I bought and flipped out of for maybe $300. And, I finally get back to break even. And within a few days of being back to break even, the major promoter at the time, Awesome Penny Stocks, put out a promotion, AMWI, I still remember the ticker, that I basically plowed all of my money into at about 9 cents, and within 5 minutes sold it at 18. And so, it was like a $2,700, I think it was about a $2,700 gain, after all this time of, dwindling down to zero and then building myself back up slowly. And then I just had this big winner, like right there, like it was just like, boom, wow, I'm up $2,700 now. And the reaction after that wasn't, oh my gosh, I'm doing great, now I have to trade more. And it wasn't like, I didn't have the more mentality right after that big win. I distinctly remember feeling like I have to protect this. I have to keep doing what I've been doing. I have to keep being careful. I know some traders will have their first or second really big wins and get excited and then start pushing, trying to repeat that success. And for me, it was exactly the opposite. It was like, I need to sit on my hands and not throw this away. And that's, again, I stuck to what I was good at, and the rest took care of itself.
Awesome. So there was another great one up here where they said that they know that you have a trading plan prior to the market open, but a lot of Momo trades pop out intraday. So how do you handle intraday movements that weren't in your original plan?
Well, if it's one of the tickers I had on my watch list, it kind of depends where in the pattern it is, because I'll handle it differently if it's, a day one play where, hey, it's, something like a good Momo trade today would be, oh gosh, I can't think of the ticker now. ONTA? Oh no, GNCA, that's it. GNCA was an example of one that just like popped up out of nowhere today, where this wasn't on my watch list coming into the day. I really had no reason to expect it was going to do anything. And then right around 2 o'clock, after kind of an uninspiring open and fade off and consolidating around $5, it just ripped out of nowhere. I think like a good analyst note came out on it or something like that. And it squeezed all the way up to over $8 after hours. Even by the time it was into the close, it was up in the 770s. So 50% off the lows. Now, if it's a stock like this, keep in mind, again, a lot of the time I'm thinking short sell. I'm not a good buyer. I'm really not with these listed stocks. So I don't try to force the issue. But GNCA, like this, as this is spiking and as this is ripping, this is still day one of the move. And especially once it gets through the high of the day, or even the pre-market high of 640, that's my like, okay, like I just don't even want to step in front of this. This is still front side of the move. This is day one. This is early. I don't want anything to do with it. But if we're talking about a stock that's on my watch list, maybe it's on day 3 of the move or day 4 of the move, and it's nice and overextended. And sure, I have my plan for right out of the gate. I have my plan for the first hour and a half of market trading. But after that, you're right. Like it does become a little bit more of reading the intraday chart action and kind of winging it, so to speak. And really, I'm just using the intraday price action to guide me. I'm using intraday resistance points to guide me. Had GNCA been a chart today that was on day 2 or 3, and it had been on my watch list, and I had been thinking about shorting it into the afternoon or something like that, my likely play would have been, okay, I want to short into this spike and risk off of, either the morning high where it opened at 9:30, so 560 area would have been my risk, or pre-market high of 640 would have been my risk. Maybe I would have tried both areas. Point is, I'm using previous points on the chart from earlier in the day to help guide my decision making. As far as how my overall bias is concerned, that's pretty much consistent from market open till market close. I'm using the daily chart to guide me on that. So something really significant would have to happen intraday in order to change my mind on whether I'm long biased or short biased. I guess one more example here. Gosh, I can't remember my tickers now. Just 1 second. Oh, there we go. LEU. This is one yesterday. Going into the day yesterday, LEU had not been on my watch list. I hadn't even really been thinking about LEU. And it did wind up having a good day yesterday. It was running. It was spiking. Let me go back to a 2-day chart to show you the intraday action. But LEU, so here's an example of one I don't have a plan for coming into the day. Hits my radar midday, and I'm thinking about if there's any way I could play this. It's a matter of going to your playbook. What setups do you look for? What setups do you like? LEU was a perfect multi-day breakout. We had, this high from March 8th where it traded 15 million shares, spiked as high as 405. So I was very, very interested in a multi-day breakout past that 405 level. And that's a decision. That's an example of something I can just wing it. I can make that decision on the fly because it's my playbook. I know this setup inside out. I play breakouts all the time. So LEU, it hits my radar and I'm saying, okay, I need to keep an eye on this for the breakout. And later in the day, when it does break past that 405 area, I bought some. And then when it looked like the breakout was holding together pretty well, I bought some more in the afternoon here, around 3 o'clock or so. And then it ramped up into the close. I gapped it overnight and I sold it in pieces this morning, between 480 and 520, I think. So overall, it's one of those been there, done that kind of plays. Like I've traded a version of the breakout play at least 20 times, probably more with these listed stocks.
I love it. Yeah, having kind of some old reliable patterns that you're looking for definitely makes it a lot more simple on really anybody, no matter what your trading style is, whether you're swing or intraday or whatever you are. If you have a few tried and true setups that you just really know well, that'll always always put you in a good position.
Exactly. And that's really the key thing, is it needs to be something that you understand and that you are comfortable with. A setup that you have seen a lot of times before and you know exactly how you want to play it. I mean, just because it's moving doesn't mean you have to trade it. Just because you see other traders trading it doesn't mean you have to trade it. I would so much rather miss out on a trade than just take a stab at something that I don't really understand.
So how would you give advice for somebody just starting out and they are under the unfortunate rule, the PDT rule?
The PDT rule, yeah, that's a fun one. Well, let's see. I always have two answers for this, but one of the answers now I'm not so sure about. So I used to recommend the broker Shirt Trader. And the only reason I'm a little iffy on Shirt Trader now is because the guy who founded Shirt Trader just got in trouble for some kind of pump and dump scheme or something like that. So I don't really know the details on it. I just know what the SEC put out about it. As far as I know, the broker's operating as normal. And I mean, that was nice because it was offshore and there was no pattern day trader rule for offshore accounts. But, it definitely makes you pause when someone who was that connected with the broker is in trouble for something like that. Now, what I did to get around it before the days of Shirt Trader was I had those multiple brokerage accounts. Now that is tough. I mean, I don't know if I would have been able to do that if I hadn't borrowed the money from my parents, because like I said, I only had $1,500 of my own money. So you can't really take $1,500 and split it into three $500 accounts, because a lot of brokers do have account minimums and things of that nature. Another option I've heard of is prop firms, but those are notoriously unreliable. And I've heard some horror stories of prop firms like going out of business overnight. And I don't think your money's insured at a prop firm. So if the prop firm goes under, I don't think you get your money back, if I understand it correctly.
Nope.
So I always tried to stay away from prop firms. So, I mean, if you do have like a good friend or family or something like that, where you can have some kind of arrangement where you've got that money just to sit in the account and keep it open, and you never take a bigger position size that would put their money at risk, maybe that's the way to go. Or maybe if you do have $3,000, $4,000, $5,000 and you can split that between 2 or 3 accounts, that does give you more day trades per week. And honestly, when you're just starting out, you probably don't want to be trading more than that, like 6 to 9 day trades a week anyway, because early on, that's a very dangerous time for a trader. I definitely learned kind of trial by fire method to a certain degree. I mean, a lot of my best lessons are my losses. And thank God I only had $1,500 on the line when I first started, because if I'd been trading with a $25,000 account thinking I knew it all, I would have lost a lot more money than was recoverable, and I probably wouldn't be here right now. So I think best option right now is just try to get multiple brokerage accounts open if you can, and get up to 6 day trades a week or 9 day trades a week. But yeah, it's a sucky rule.
I think probably another strategy that someone might look at is actually look at it as being kind of a, I guess, forced benefit, where if you only have a few trades per week, then you want to make sure that those trades are definitely the right trades, as opposed to, if you're not restricted by that, you might be like, well, this one meets most of my criteria, let's go for it. But if you, of course, are limited by the number, you want to be a little bit more sure. So I think, just kind of piling on there, I would just say you can just make sure that the trades that you do get into are the right trades, and then work on getting your capital up, whether it's through trading or whether it's taking a part-time job to to fund just the trading account.
Yeah. And one little side story I want to launch into really quick, or one other point I want to make about this. I see this all the time in chat rooms, and it drives me crazy, where somebody will be asking, hey, I'm out of day trades, but should I get into XYZ or whatever, the ticker is? And the answer is no. Like, if you do not have the ability to sell, like intraday, do not get in the trade. And I have my own experience with that to teach about, because I still remember it. It was the first summer I was ever trading. I was working part-time at State Farm, trying to juggle work and trading. And I had my best win ever. I think I had made $150 on a trade or something like that, which at the time was the most I'd ever made. And it was my last day trade of the week. And it was some stock. I think it had been breaking out. It looked really good. It was super strong. And I had sold the position, but I wanted to rebuy a dip before close because I wanted to hold it for potential gap up, like into Monday or something like that. But I don't have the day trades. I wouldn't be able to sell. And it's 15 minutes before close. And I'm thinking, oh, it's okay. This stock, it's so strong. It's a breakout. It looks good. It doesn't matter how good it looks because I bought this stock on a dip and it just kept on dipping and kept on dipping. And I couldn't get out because I didn't have that day trade left to sell. And next thing you know, I'm selling it Monday morning and I gave back my biggest gain ever and then some. So just one of those trial by fire, growing pain kind of things, a lesson I had to learn the hard way. So just please don't put yourselves in the position to learn that lesson the hard way. Like if you're out of day trades, go out and do something fun.
Yeah, go enjoy the day. So from a little while ago, we had a good one up here. So about mentors, they asked how much of your success did you owe to Tim Sykes versus venturing out on your own and coming up with your own strategies?
That's always a really tough one for me to answer because I truly went into Tim Sykes' penny stocking silver program when I first started with zero knowledge. I had no idea about anything. I didn't know technical analysis. I didn't know what a pump and dump was. It was all new to me. So the way I kind of answer this question now is I tell people I learned the basics there. I learned all the basics. That's kind of what laid down the foundation for me. I mean, that's why I never got sucked into one of those pump and dump scams. That's why, I learned, hey, be a skeptic. Don't buy into the story that sounds too good to be true. And also a couple of his moderators, especially Michael Good in the chat room, was a huge help to me when I was like trying to figure out, okay, like, because Michael Good was one of those guys, he would nail every single Awesome Penny Stocks promotion release for, $4,000 gain, $5,000 gain, $6,000 gain. And, I'd watch it happen time and time again. And finally I started asking, like, how the heck do you do this? Like, how do you get these fills? How do you get in so fast? Like, why are you always the first person to know? And, he was really helpful in pointing me in the right direction towards like, okay, you need level 2, you need to learn, about different market makers and how to route to different market makers. And here's how you set up your email to get quicker promotion emails and stuff like that. So, I mean, a lot of basic stuff like that is stuff I took away from Tim Sykes and from the chat room. And I took some of the stuff out of Nate's room as well. But as far as, really making the strategies my own and putting my own tweaks on it, and I guess, I mean, like, if you look at my trading now, it's totally different than Tim's. Like I will short green days without a second thought. Whereas, I think Tim preaches like never do that, wait for the first red day. So I've definitely changed along the way. I've definitely taken my own turns. I definitely remember a time when I'd be reading his watch list at night or Nate's watch list at night. And I would be so concerned about what did they say? Like, what do they think about this ticker? Because I wanted to see, like, maybe I was in it overnight and I was just like, oh my gosh, like, I hope they think it's going to go up because I'm long. And like, that was like just the most important thing in the world to me. But as I kept trading and as I started to have my own success, trading my own strategies, learning from my own mistakes, I learned to trust myself and trust my own opinion. And even now, like, I try to really keep it to the point where I almost don't want to see what people are saying on Twitter. I don't want to read what people are saying in the chat rooms. I want to trust me. I want to trade my plan. I don't really want anyone else's thoughts clouding my judgment anymore.
Awesome. Yeah, I think we had, let's see. So yesterday we had Jesse, Psycho on Wall Street, do his session, and a lot of that was about finding mentors and how they can be advantageous and when they're really good ideas versus when you need to do your own thing. And I think that's definitely been a pretty ongoing, consistent subject throughout most of the speakers on here.
Oh yeah, like, I mean, I will never for a second tell people, do it all on your own. I really do think it's important to have that early guidance, but there is a point where you have to kind of become your own man, so to speak. And I think that's what really separates some of the people who make that jump to the next level.
Absolutely. And I would like 100% agree with one of the early on things that you said there, which was that, Tim gave you the foundation and then you built on top of that. And I think that's a great way to look at most any education service, no matter who the head person is that they're usually great ways to learn a lot of material in a short amount of time, but then you need to take that and actually do something with it. And that's when you find out, what styles work for you, which ones don't work, which ones make sense versus which ones are just really confusing. And you're like, okay, well, I know academically what to do, but I don't really understand it. So yeah, that's a really kind of great way to look at that. Let's see, man, we got a whole list of really good ones here. So one person asked, do you think starting with just one setup is enough? So that's, I guess, an easy one here for you.
I mean, I absolutely think it's enough. I mean, even if that means you're only making 5 trades a month, like if those 5 are winners, if that's the setup that you're good at, that makes sense to you, that you can be consistent with, don't worry about how often you're trading, worry about the results of that trading, what your win rate is, how big your winners are compared to how big your losers are. But one setup can be plenty. I mean, maybe it will be slow growth in the beginning because you're not trading too often. But then also, I mean, that's still, sitting in front of the market, watching charts, looking for that one setup, that still gives you a lot of screen time. That still gives you a lot of time to watch patterns unfold in real time. I mean, when I transitioned out to a new setup, I went from buying new promotions and buying OTC breakouts to short selling OTCs that were overextended, because that was kind of something I picked up along the way. Because with those breakouts, there comes a point when you need to sell. And there comes a point when that OTC goes back to zero where it belongs. And, kind of learning how to time my sells led me to seeing like, okay, like there's a short sell opportunity here too. And like, here's like, I'm timing the sell like this. This could also easily be a short sale spot. So like one thing, like one setup or one idea can kind of help flow into the next one. But yeah, I mean, don't be in a rush. Like that's the worst thing you can do, is be in a rush to make a ton of money in the market, because as soon as you put that financial pressure on yourself, it's almost like you've already lost. Just, take it slow, one setup at a time, get consistent at something, move on to the next thing, and just slowly add to your arsenal.
Definitely. It's, you don't want to be too sloppy at any of them. Otherwise you'll just blow up your account really quick. So we had a couple of different questions about stop losses, and I think I can lump them all into one, where it basically amounts to how often do you use actual stop losses versus mental stop losses?
Actual hard stops versus mental, yeah. Well, back when I traded mainly OTCs, I would never ever use a stop loss, because I mean, executions on OTCs can definitely be difficult at times. So I just wanted to have the control of putting the orders in myself, routing to the market makers I wanted in the moment. So I never had it in the computer's hands. And that kind of stuck with me as I transitioned over into listed stocks, where I've always been the guy who does mental stops. And for the first 3 years of my trading career or so, I was really, really good about it. And then probably a few months into trading NASDAQs, I started to slip up, and there'd be a short sale where I'd be in a short trade, it'd be going against me, and I wouldn't cut it because I'd be like, oh, NASDAQs are choppy, it's going to come back down. And then I'd go on a ride. And, maybe 3 days later, after holding through a pretty scary unrealized loss, I'd be okay. And that happened to me again and again and again and again over the summer of 2014, where I wouldn't stop out of something. It would be okay. I'd go on a ride. But like, I never actually took a major bad loss. And then Lake happened, and then PBMD happened. And, all of a sudden I start, having these disaster losses where it just gets past my pain threshold, and it squeezes me much further than I ever thought possible. So that's been a big project of mine over the last 5 months, is trying to fix my stubborn streak. And there came a point where I said, okay, mental stop losses, they aren't enough, because I'm not respecting them. I'm not getting out when I say I'm going to get out. So Again, I tried to make it a big focus, cutting losses, and I tried to do it the mental way. And up through about January, it was working okay, but I'd still have about 6 or 7 trades a month where I didn't stop out as planned. In February, I started using hard stops on almost all of my trades. And that took care of business. The computer takes over, it stops you out. And February was like one of the best months I had discipline-wise. And I tried to say, okay, well, now going into March, I'm going to try to do it mentally again. I've seen like, hey, good discipline leads to good trading. But it didn't transition over. March was another sloppy month for me. I probably had 7 or 8 where I didn't cut losses this month. So going into April, I'm going to go back to a lot more hard stops. So that's a long way of answering the question. But for me, it kind of just depends on where I'm at as a trader, I think. I will always prefer mental stops if I can stick to them. But if you're trying to use mental stops and you wind up in stubborn positions like I do, switch over to hard ones because it's just not worth it.
Definitely. I think probably one of the hardest things to do is when you rationalize yourself out of a plan that you already had. You said, all right, now this is my line where I need to get out no matter what. And then you hit that line, you're like, but I think it's gonna do what I want, just a little bit longer. And it's easy to slip up and let it happen a few too many times. We also had a couple different questions about adding to positions. So one of them was, Modern Rock always talks about adding to winners. How do you do it successfully without killing your average? And then another person added on to that and asked, how does adding to a long differ from adding to a short?
Okay. So I'll start by saying I don't add to winners very often. It needs to be a pretty high confidence trade on my part if I'm going to add along the way. And usually the only setups I'm going to do that with are either an OTC that's way overextended and breaking down, or a NASDAQ breakout play. Or I guess an OTC breakout play too. Any breakout, I usually am pretty comfortable adding if it's going in my favor. Because those are bigger picture setups where I feel like, okay, the move isn't all going to happen like in one quick, shot in 15 minutes. This could be like an all-day thing that trends my way. So for LEU, we talked about LEU earlier and how I handled that, where 405 was the breakout line. And I mean, in this case, that's too high. There we go, 405 breakout line, close enough. So I bought it right as it broke on the strength. And I didn't buy it too big at first because part of what I want to see early on in a trade, such as a breakout, is does the breakout stuff? Like I don't want it to spike from 405 to 410 and then slam back to 385. That's usually not the best sign, and usually a sign that, okay, it's maybe time to start thinking about an exit on this for a reasonable loss. But LEU, that had spiked all the way up to about 425 and topped up there a couple times. And yeah, this dip in the afternoon was a little harder than I like to see, but I watched them flushed under 4 and they immediately saved it and bounced it back up. So I put an add on also again in the 405 area after I'd watched it grind for a few minutes and I was watching the low 4s, support again. And I felt comfortable putting another small piece on there. I guess part of it too is where my risk line is, because my risk line will move as the trade goes. When I first entered LEU the other day, I had small size and I wanted to risk it all the way down to this 365 previous support from when it had spiked to 390 in the morning. That was the hardest pullback it had down to the 365 level. It supported and then was grinding up from there. So that was kind of my line in the sand where I wanted to give the trade time to work. I wanted to use a wider stop. But later on, after it had broken past 390, broken past 405, I felt like my stop loss could be more like that 390 area. So also, it does depend what your size is in relation to your risk. I wouldn't have wanted to add that second piece to LEU if my risk level had still been down to 364. But since I felt comfortable moving my risk up, I felt comfortable putting on that additional piece. And it is no different really for a long and a short. RJetQ was an OTC short I had this morning, where it got smoked out of the gate, and I had to chase a bit on the panic in the morning here. It was, the first down day on an overextended chart here. These are daily candles now. So in 3 days, we were up from 120 to 270. And this morning it gapped down. So I got short some this morning in about the 260 or 255 area. I can't remember initially what it was. But, this is the first down day on a stock that's up a lot. And the first bounce was from the 220 or the 230 area up to 250. So, I had a piece up here that really wasn't that much size from 260-ish. And I put an add-on up into the 250 area. I think maybe I had a 245 execution on my ad, adding to a winner there. And then, got that next leg down and tanked down towards 2, and I covered some up. Now, part of that question was without shooting your average in the foot. And yeah, especially with RJETQ, it did bring my average down. I think my average went down from like 260 to 250 or something like that. But I'm not so worried about what is my average. I'm more worried about what is my size and my average related to my risk. So when I put that ad on, I was thinking, okay, I'm going to have to stop out of this trade if it breaks past 270. So I planned my ad accordingly. I planned my ad for that 270 risk and to make sure I wasn't past the $2,000 risk that I wanted on the trade. And again, as your stop loss level moves down, later in the day, if I had wanted to, let's say I had kept all my position and I hadn't covered up any down here in the $2 area, well, maybe I would have been thinking about 250 as my risk now, where the first bounce failed. So I could have maybe added into this first bounce up towards 230 and brought my average down a bit further, but still been playing with only a $2,000 risk off of 250. But for the most part, I don't like adding to winners. I don't like, I'm the kind of trader who likes to pay myself and take gains, not keep putting myself in a position to move my risk level down, risk level down, risk level down, and potentially have to stop out later for a loss on something that had once been a nice winner.
Awesome. So really quick, for anybody who is watching in on the YouTube channel, since I see we have a lot more viewers over there than we do on the actual site, if anyone else wants to jump in and add your questions, make sure to jump on over here to digitalstocksummit.com. And you can click on the watch tab at the top and you'll be able to find our little chat room down there at the bottom of the page. So we have, let's see, how are you feeling, Tim? How are you doing on time?
I'm doing okay. I could probably go another 15 or 20 minutes here.
Okay, cool. So I've got a list of about 5 more questions that I've saved here. Maybe if everyone else wants to throw in like their one best question, I'll pick a couple more out and make sure that we start wrapping up here before too much longer. Now there's one that was asked up here a little while ago. I think it was from who was it? Wasn't Chris, it was, I can't find her name anymore. It was a great one. It was, why do you think that there aren't that many female traders out there?
That's a great question. I really don't know. I know that Tim has a new student now who's a female trader who's very successful. And I know that the person who runs the swing trading room in Investors Underground is also a female trader. I know they're both very successful. As far as like why it's a male dominated thing though, and like why usually it's, guys who get interested in trading, I honestly don't have the answer for that. That I would just be guessing, but I mean, the women have, they've certainly proven they're capable. Like, I mean, I think anyone can do it.
Yeah, I actually tried to get Michelle to come on here. Unfortunately, she was otherwise occupied. But Tim Stoon, are you talking about Airplane Jane?
Yeah.
Nice. I am actually going to have her on. She contacted me a couple of days ago, and unfortunately, it was too late to get her in the main lineup. But we're going to do a extra interview here in probably another week or two.
Okay, yeah. So save that question for her. She might have more insight.
Yeah, definitely. So that'll be a fun one. Let's see here. So you mentioned that you're not really that focused on technical analysis. What are your thoughts on the best way to learn entry exit points? And then we had a second one that was when and if you dip buy, how do you manage entry exits? So Maybe just kind of a general, what's a good way to practice entry and exits? How do you really kind of work on that aspect of it?
Okay. Well, I will start off by saying especially with listed stocks, my exits are probably one of the weaker parts of my trading. I need to, sometimes I'm just a little too quick to see like, oh, hey, I've got a gain, and then like, press the sell button, and then kind of think like, okay, why did I do that? Like later, like what had made me do that other than the fact that like I knew I was up on the trade. So I can definitely be too quick to take profits sometimes. But as far as entries are concerned, and I think this goes well with the dip buying question, because if I'm looking to buy a stock on a dip, I mean, my focus is really on what are the prior support levels that matter. And I guess also is the overall trend in my favor. So I'm going to use RJET-Q as an example here, even though I would never consider dip buying this, because this is one where big picture wasn't in my favor. This is first down day on a very overextended chart. This is not something I'd be looking to buy dips and hope that the stock will reverse and grind back. This is something where I think overall the trend is down now and odds are not on my side. So, I mean, it's a big difference in my mind, I guess, green day versus a red day. If I'm thinking about dip buying, I want it to be on a green day where the stock is showing good overall price action. But let's pretend this is a green day right now, and I'm thinking about, hey, where can I dip buy this? I mean, I would say anytime midday here, as this is consolidating above this $2, like nice round number that had held this support. I mean, that's something that I might very well say, like, okay, I want to get into RJET. I think it's going to ramp back up, and I want to use $2 as my risk because that's a nice risk level. It's major support from earlier, and then it's just a matter of, basically how patient do you want to be? How close to your risk level do you want to get in? And depending on my patience level, I mean, maybe I wait for 215, like right in the middle of this channel here between $2 and 230. Or maybe I'm waiting to get in much, much closer to my risk, like 205. Now, in most cases, I want to be in closer to the risk level than further away, because closer to the risk means you get better risk reward on the trade. Maybe you're only risking 5 cents a share to make 15 or 20 cents a share, instead of having more like the 50-50 split where you're risking 15 to make 15. So I guess it all depends, first of all, on, what's my plan? How close to the risk am I able to get in? But if it's one where I've got a little bit of fear of missing out and I think that it's not going to dip far enough and I just have to get in, if I am getting in further away from that risk level, it's going to be with less size. Again, my trading is very much tied into how far away from my risk am I? What does it mean in terms of dollars if I had to stop out of this trade? And I kind of see a follow-up question here, like, how do I choose what stocks to dip buy? And kind of like I said, I want it to be something where I feel like the overall trend is in my favor. The overall pattern is in my favor. LEU, I mean, that wasn't really a dip buy yesterday. That was a buyout, or that was a buy into strength when it broke past the 405 level, the multi-day breakout. And, again, you can see it on the daily level now, like why I was buying that. But that's also part of the reason I was buying dips. It had also broken past this little double top here from the day it had earnings. 387 and 384 were the two tops on these days that it also broke past. So this kind of became my support level in the afternoon that I was thinking about. And that's why I had that add into the weakness here in the afternoon, even though it had just cracked under 4. I was thinking a little bit lower in the mid to high 380s. So I'm looking for stocks where, again, overall trend is in my favor and where I can get in close to the level I want to risk off of.
Awesome. So earlier in the Q&A, you were talking about routing to different market makers, and somebody asked, well, why is it advantageous to go to different market makers? And that's a really great one, because I don't know either.
Yeah, that's a lot more of a concern for OTC stocks. And I guess the way I think I remember Michael Good kind of explaining it to me was back in the day, if you're routing, just a normal limit order, let's say you're trading with E-Trade, your limit order was likely going to the market maker NITE. So you've got a new major promotion out. Awesome Penny Stocks just announced that whatever is its new pick, and all these E-Trade buyers are throwing in limit orders. They want to buy this pick, and that's happening at all kinds of brokers all over the place. And most of these brokers, their default route is going to be NITE. NITE handled, I think it was back in the day, like 75% of the OTC volume, at least, something like that. But the broker I was using back then was SpeedTrader for this. And SpeedTrader would let you route to market makers like CSTI or VERT or VFIN, all these other ones that are smaller market makers, less heard of. But it was almost like a way to cut in line, because while all these other traders are clogging up night with all their buy orders, you're routing somewhere else. You're telling some other market maker, hey, buy me this. And, there wasn't even necessarily a right or a wrong market maker. If a new promotion came out, I would just throw out orders everywhere. I usually had about 5 or 6 different market makers that I felt like, hey, I might get a fill with them. And I would just scatter my orders between the 6 of them and see what filled. My big Fannie Mae trading day, back when Fannie Mae had its crazy run on massive volume from like $1 to $5, routing was a huge part of that. The confidence that I could get a fill. NITE, if I was throwing in orders through NITE on Fannie Mae, that order could sit there for a few minutes and nothing would happen. But what I found, especially with that one back then, was the market maker Citadel, CDEL. I would get almost instantaneous fills with them. I don't know why they were so much better. They just were. And it was like that with a lot of OTC stocks. You just have to kind of try different routes, test things out, and see which ones filled better than others. And the advantage, especially mentally, of knowing that you could get a quick fill was absolutely huge, because I was able to be a lot more aggressive with Fannie Mae as a result, especially on the bounce play, where, if it had started to reverse and looked like it was going to head back down, I knew I wasn't going to get stuck.
So it's almost like when you're standing in the grocery store and you see everybody lined up at one cashier, and then the next one has like nobody in line. You're just like, well, I guess I'll go over there because I'm going to get done way faster.
Yeah, that's right.
Wasn't Citadel one of the high frequency firms?
They might have been. I don't know. I don't think most of my brokers won't let me trade Citadel anymore. I think they got a little bit angry with how abused that route was getting.
Yeah, I think I want to say that one of the main guys at Citadel is now involved with the IDX exchange, and they're not on good terms with a lot of people.
Yeah, they really aren't.
So I really loved this one. It was, you were saying that when you first got started, you were doing part-time trading, part-time working, and somebody had asked a little while ago, how do you manage balancing that? Part-time working and still trying to be able to get your time in there to trade.
Oh man, I wish I had a good answer for that, because it was never easy for me. It was a lot of looking over the shoulder at work, hoping that I didn't get caught with the stop chart on my screen. It also really depends what you do. I think. Some jobs offer a lot more freedom than others, I think, as far as like what you can do with downtime. I at least had a computer in front of me most of the time, so that made that part of it easy enough. But at the same time, my computer had a lot of restrictions on it. I couldn't download any kind of desktop software. I don't think I could load chat rooms, if I remember right. I was really just like web-based trading off of my Thinkorswim. And that was, not a very smart way to trade, or a very effective way to trade either. So it's not something I really ever had any success with, or any kind of consistent success with, while I was at work. It was easier as far as when I was back in school in the fall at college, because at least then I could schedule as many classes outside of market hours as possible. But yeah, it's real tough when you've got those other commitments. But again, even if I wasn't trading that much at work, at least I still could watch a bit. And, having that time in front of the screen was helpful.
I used to, I had the Thinkorswim app on my phone, and I would have that turned on, just kind of off on the side of my desk for a while. And then I would, run out and do my coffee breaks to actually do the trading if I could.
Yeah. And I think I saw a question earlier. Someone was asking about phone trading, I think, and do not recommend that. I do not at all. I tried phone trading in class a couple times, and those were a couple of the most terrifying trades I've ever been in. Partially because of the circumstances, tanking OTCs I was trying to buy bounces on, but it just, it's not easy to manage from a phone. I honestly think it's something you probably should be giving most of your attention to if you're trying to make a trade. So if you're trying to kind of sneakily do it at work or on your phone or something and splitting your attention, it's not really a recipe for success.
Definitely. And I guess one strategy that you might look at would be changing up your time frame. If you're looking at intraday stuff, that's going to be really hard, if not impossible, to do with a full-time job. But if you're looking at like a month's type time frame, then your individual like day to day isn't actually going to be that impacted.
You're absolutely right. Yeah. I overlooked that part of it because like a lot of the stuff I was trying to trade was stuff that could turn on a dime. And, if I came back 15 minutes later, it would be possible that things were drastically different. So if you are trying to trade with split concentration, whether it be because of work, school, whatever, I agree completely with what you just said. You want it to be swing trades. You want it to be wider time frame stuff where you're not living and dying with every tick.
Now, of course, we're getting a lot more questions about time frames, and those really aren't really questions that we can answer without knowing your situation, and that's a bit more detail than we want to get into. But at the end of the day, it's finding the right style that works for your situation. And if your situation means that you're unable to do trades during the day, then look into swing trading. Look at the days to weeks to months time frame rather than intraday, and that'll take a lot of the pressure off of you. So let's see.
Let's take two more, but then I gotta roll.
Sounds good. And this one that came in is a good match to another one that I had been saving here. So it was the original question was, if you're just starting trading today with $1,500, what setup would you use to grow your account? And then we've got some add-ons that I think all kind of pair well, which would be like, what tools and websites would you be looking for? And then this most recent one that just came in of, what's the one piece of advice that you would give yourself when you first started out?
Okay, lots of small account stuff. I got it. Okay, well, yeah, I've thought about that a bit. If I were just starting, how would I handle it? Because the OTC glory days, they really are, they're not totally gone, but they're not what they used to be. There's much less opportunity in the OTC market now than there used to be. So, I mean, I would definitely be looking at multi-day breakouts on listed stocks. That would absolutely be a setup I would want to learn, understand, and try to trade. Aside from that, and again, I'm not much of a buyer. I know I would have to be focused on the buy side. I know that I'd want to be looking at these volatile NASDAQ stocks from day to day, just whatever happened to be up for whatever reason. But as far as other buying strategies, aside from multi-day breakouts, that's not something I've really developed yet. That's something that's kind of a next step for me. Once I get my discipline back under control, I want to, I kind of want that to be the next thing I add to my playbook. Now I can tell you what I'd be looking for and what I'd be trying to track on my own, because I did a lot of tracking early when I started, and that's kind of how I, guided myself to have confidence in some of these setups that I traded. I'd probably be looking at and tracking, stocks that gapped up and had nice morning spikes, and then maybe dipped back off of those morning highs. Maybe the morning high was 11 o'clock or earlier, let's say. And I'd be looking at those dips and trying to figure out maybe like, how far did they dip? How well did prior supports hold? How many of those ones that had those big morning runs would ramp back up later in the afternoon and at least retest the area of their morning high? I'd be trying to develop some kind of a dip buying strategy for the ones that were up on good news and it was only day one of the move. But as far as specifics of what that is, I don't know yet. That's something I have to track more. That's something I've got to kind of, sort out on my own. And that's something you guys can do as well, is, just track situations, track these setups, see what patterns you can find. And, it all depends what you're looking for. Now, as far as tools, when you're first starting and you have a smaller account, Yeah, unfortunately, equity feed can be a bit expensive. I think it might be like $140 a month or something like that. And I don't think I would have wanted a tool that expensive when I first started and I had the smaller account. I mean, that's a big cost to have to overcome. That means you need 10% in trading gains every month just to break even. And that's really not a situation you want to be in. Those are pretty tall odds. So I think that, well, first of all, finviz.com, that is a great resource. There's a free stock screener on there. It won't screen for OTC stocks, listed stocks only. But there's a lot of different things you can put in there, lots of different requirements. I mean, you can put in, a volume requirement, percent gain requirement. There's just tons of stuff in there. So for a free screener, there's a lot that you can do with it. I think there are some other paid screeners out there. Some come with trading platforms. I'm not too familiar with many of the others, but there may be cheaper options out there that have a little more versatility than FinViz does. So it kind of just depends, again, what you're looking for, whether you would miss being able to scan for OTC stocks or not. Did I miss anything on the smaller account front?
I think you got that one covered pretty well. So the last question that I've been holding here, a little bit more philosophical and opinion based, and it's just, what do you think are the ramifications of artificial intelligence making an entrance into the trading marketplace? And do you see this as potentially damaging to day traders?
Oh man, I haven't read about that. So I'm guessing that's a step beyond all the crazy algorithms that are out there right now then.
Yeah. So that would be like the algo trading that gets to make its own decision without needing a human to screen it.
Oh boy, okay. And then maybe learns as it goes kind of thing. Well, I would say, I mean, you would think something like that would probably operate more on, some of the big board stocks, like the Apples and Googles and stuff like that out there. A lot of this algo stuff doesn't usually make its way over to OTC stocks or some of these really puny $2 or $3 NASDAQs. So I would kind of hope they keep on their corner of the playground. But AI, man, I could definitely see AI just like dominating humans in the market. Like I think algos already dominate humans in the market to a certain degree. So if you take it a step beyond that, it just wouldn't even be fair. So we'll see what happens. We'll cross that bridge when we get to it, but it's going to be really interesting.
Yeah. In the end, I feel like it'll be like most other industries where the more automated things get, the less necessary we are.
Exactly. Yeah, like I could definitely see like all these Wall Street firms in the future just all having AI, and that's that.
Have like one person in the back to cash the checks and
right, exactly.
Well, cool. So I guess just to kind of wrap things up, you offered a really awesome discount for people who have the all access pass for your DVD. Do you want to maybe give a little quick plug for your DVD and what you talk about on there and why that's an awesome thing?
Yeah, sure. I'll plug it real quick. So yeah, the DVD, it's something that I made, when did I start filming that? End of 2014 through middle of 2015 I filmed. It was about a 6 or 7 month project for me. And it's about 16 and a half hours of content. Just kind of each chapter builds off the last one where it just starts with absolute beginner basics, talks about basics to technical analysis, then basics to my trading strategy, how I scan for plays, how I make watch lists. And then the final 8 chapters, each chapter is a specific unique setup that I trade on a day-to-day basis. And, basically I just teach the setup and then show live trade examples, usually 4 or 5 per chapter. It's gotten great reviews so far. People have loved it for the most part. #1 on Investimonials, which I'm really proud about. And yeah, the discount, I did get a discount for all of you guys who attended this summit. I got to look it up really quick to remember what the promo code is. I think it's just Digital Summit.
I think that's what it was.
Yeah, Digital Summit, one word, all capitals, and that gets you $1,000 off the DVD. But yeah, I mean, I just tried to put everything into it I could think of that I wish I had known when I first started trading, and then just teach the setups that I use every day and that I am the most consistent with. And Yeah, I mean, that's basically all there is to it. Oh,
Awesome.
and I do remember seeing a question earlier float through the stream about whether I'm trading any setups outside of that DVD right now, like if I've learned anything new since I did that DVD. And the answer is no. Like that, I still am trading the setups that are taught in that DVD. I haven't really employed any new trading strategies recently. The last 6 months have been more geared towards fixing my discipline than anything else.
Awesome. All right. Well, hey, thank you so much for joining us and being willing to chat with us here tonight. I think it was definitely a great session. I learned a lot. I'll have to go back and rewatch to see what I missed while I was writing down all the questions.
Yeah, thanks. I mean, thanks for having me. Thanks for hosting and helping me sort through the questions. It was a great time.
Awesome. Cool. And for all of you out there watching, yeah, check out the All Access Pass. I think we're actually up to like $3,000 in different discounts and credits and trading commission credits and all kinds of cool stuff, as well as several different ebooks from I think about 3 or 4 of the different speakers, and even a free trading session a free coaching session was thrown in there. So definitely check that out if you want to get all the extra bonus content. And otherwise, I am looking forward to sharing the day 5 with you guys tomorrow. We've got actually a really good follow-on to the AI questions. We've got Aaron Fifield from Chat with Traders, Kevin Davey, Andrew Faldy, and then Ben Ryan, who did our Q&A last night. He will be back on for a quick little keynote address. But the first 3, Aaron, Kevin, and Andrew, they all talk about either systems or algos or learning how to code for trading. So that's definitely some really interesting ones if that's the kind of thing that you're interested in. So anyway, thank you all for joining us tonight, and I hope you all have a wonderful evening, and we'll see you later.